Let's take a look now at how to trade the wild volatility that we've seen in the markets. If anything, the volatility has come off a little bit recently, but it is certainly something that many traders and IG clients, of course, are talking about. Bryan Noble from TraderNoble.com joins us now with some more. You trade these markets every single day of the week. You've been in before. We've spoken about some of your positioning. Before we take a look at your charts for today, which include the Dow and the S&P, which have been wildly volatile, how do you go about forming a trading strategy in times when there is this wild volatility? We're constantly telling clients to put stops on, but stops are generally quite close. But you can't have a close stop in these sort of environments. How do you do it?
I think we had a year of complacency with the VIX trading sub 10 for most of last year, which is unprecedented. If we go back in history, the previous 30 years, and then when it all kicked off on the third week in January, you really have to start just do smaller trade size with wider stops. Because otherwise you're just going to get stopped out of your position all the time. And I think having positions overnight is very dangerous. You have to trying and be flat. With my clients, I try on my platinum service, I try to get them flat overnight. Okay, if you're long a gold or a silver contract or a bund, it's not the end of the world. But certainly if you have an S&P or a Dow or a DAX position overnight, you run the risk of a huge gap move the next morning. So why run the risk of that? Just go flat at the end of the day, and then you can wait till the next morning to put your trade back on.
You update your clients a number of times a day. Your first early morning call comes before the markets open. I want to take a look, if I can, at your rolling Dow contract, that you call it, on the IG platform. It's called the Wall Street Index. Let's bring up a chart of this and we can see this wild volatility. Where are you now positioned in this trade at the moment?
Yeah, it's been incredible. I mean, the one indicator that I've been going on about for the last 7 or 8 years is the McLaren oscillator. It's the internal reading of the market. And when that gets down to a reading of minus 250, the market is oversold. It works maybe 4 or 5 times a year. This indicator works for. It's the first thing I check in the morning. But this particular Thursday, before last Friday week, we closed at minus 374. The Dow and the S&P both sold off aggressively on the Friday, and then whoosh, from a low of 23,350, the Dow rallied almost 2,000 points into the next week. This indicator is just fantastic, and it stops people doing silly things. So, if nothing else, if your viewers can learn this McLaren oscillator, just Google it, go into the data page, and then you get the summation every day. It comes out between 4 and 5 in the morning, London time. You get the correct reading.
Okay, we don't have that on here, but just indicate now where you are in terms of the positioning, in terms of price action, where we are on this chart. We've seen this recovery underway here. It's just bounced off at the underside of the green line, which is the 50-period moving average, and we're now back on our way seemingly to this blue line, which is the 100-period moving average.
Yeah, I think ultimately the Dow is going to take out the lows. I mean, we haven't really tested the 3,100 low. The S&P did test it, but the Dow didn't. I think ultimately we will test this 23,100. And what people got to realise, in percentage terms, we only moved 10%, but in points terms, the Dow moved always 4,000 points. I've never seen that in my 30 years of trading. I've never seen the Dow move 4,000 points in a 10-day period. It's just phenomenal. And then to rally back again, everyone has got complacent. They think it's okay to be back in equities again. Anybody holding equities, you can see how the stair step case that they're moving up, and then when they fall, they just get absolutely hammered. And a lot of these stocks have not really recovered. And the Dow is heavy. We saw yesterday with Walmart results coming out, and the share fall of 9.4% had a huge impact on the Dow. So I think ultimately, if you want to try and get short the Dow, you'd love to get short at 26,000. I don't think we're going to get back up to that level, but certainly 25,500 is very good resistance. And then on the buy side, obviously you've got the 100-day moving average, and then ultimately the 200-day moving average at 23,370. Trading's like an elastic band. When you hit a support, you tend to get a nice bounce off at first. So anytime we hit these big averages, you can be a buyer into them initially, looking for a nice decent rally. We can have a stop below in this case the 100-day or the 200-day moving average. But ultimately, if we do break the 200-day moving average, then we're going into, we could easily go back down to 21,000. There's very little, as you can see in the chart, support on the market on that basis.
Okay, similar in terms of the pattern that we've seen. This is the S&P 500. Currently trading, if we bring up the chart on this, we're at 2,717 at the moment. As I say, very similar sort of picture, obviously.
Yeah, obviously the S&P is kind of holding in a bit better because of the Nasdaq. The component with the Nasdaq stocks have actually held in much better over the last few, sort of week to 10 days, even when we sold off. The S&P's had a huge rally back off that. We had a double bottom there. You can see the two back lines at 25.30. We rallied back up to 27.53 has been the high rebound so far. I think anywhere between 27.50 to 27.75 is a very good area to go short with kind of a 28.20 stop. Ultimately, I think we'll take out the 100-day moving average again down at 26.80 and go back down to that 2500 area. But initially, again, as I mentioned on the Dow, the first time we hit a support level, you tend to get a good bounce. I'd be an aggressive buyer if we do get down to 26.80 in the S&P, looking for 20-25 points, and then don't hang around. The problem with markets is if you don't take your profit, somebody else will, and the profits evaporate so quickly. And as we've seen over the last couple of weeks, when you're short the market, you only have a few hours to get out of your position, or it's gone.
Yeah. Okay. Currency markets. You said in the past you don't want to be short euro. Is that still the message?
Yes. I still think the euro will probably test the 122.50, which is big support. That's why I'm looking to buy it. We kind of got down to the figure this morning. We've had a small bounce since then, but I think 122.50 is good support. Ultimately, I'm looking for this euro back to 127, 129, where I will be a seller. I think we've, at that stage we'd have rallied almost 25 handles off the 103.40 low from last January, and I don't think the ECB are going to be too happy with the euro. That at that level is going to definitely hurt the European economy. If we go back to last January, Trump, when he got in, he turned around and he said we're going to weaken the dollar. Very few people believed him. We've had a nice weakness of the dollar. It should make them competitive, and it's interesting, since the euro started to sell off, the DAX has actually outperformed the US stock markets over the last few days.
Yeah, okay. Of course, closely linked to the positioning of the dollar is the commodity markets. How are you positioned on gold at the moment? Because you've seen a break. In fact, if I bring up a chart of gold, we've been following this head and shoulders pattern here. We've seen a break once again, this neckline here. The head and shoulders pattern is now, of course, over, but we're resting on this 50-period moving average for gold at the moment at a price of, at 13.28?
Yeah, I mean, gold, one thing I look at markets is the price action, and when the equity markets really got hit, gold couldn't really rally. We kind of got up to the 1360s. Before, that would have been easy back over 1400. But one indicator that I follow on that is called the Daily Sentiment Index. That got back to 84% bulls last Friday. Generally, when that DSI is over 80, you don't really want to be long gold. We've had a nice sell-off from that level. We're obviously testing the 50-day moving average here at 1328. If we do break that, as you can see, we've got huge support at 1300 on the 100-day and 1290 on the 200. So certainly between 1295 to 1305, I'd be a big buyer in gold for a retest of that 50-day moving average.
Okay, bottom left-hand corner there, you can see that sentiment at the moment is 64% long. Clearly that is something that you cast a wry smile at. Quite often this is actually a contrary indicator, isn't it, the sentiment?
Yeah, when I was back here, I've been basically with you every month for the last few months. When we were here in October, November, everybody was short the S&P and the Dow, 85% of the clients, and it was a recipe not to be short this market, to go and buy it.
Yeah.
So it's a great indicator. Please look at IG for that sentiment every day. It really, really works well.
Good. Okay, all right. So Bryan, thanks indeed for joining us. So Bryan Noble from TraderNoble.com. You can catch up with more with Bryan on his website.
The new IG trading platform. Fewer clicks, flexible layouts and time-saving settings. Split charts across multiple time frames and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.